Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Thursday, May 25th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We finally got a push to the outer edge of the impulse move, 24.04 half here after price pushed back above the 76 half here and held it. That was an indication we were coming to push into new highs, and we got it. This push right now, that high right on the button, is the R25 pivot. So it's the PivotBoss R25 on a monthly basis. So it's 25% extension beyond the previous month's high as measured by the range of the previous month. And so we got that to the tick there, and now price is pulling back. One thing that we talked about as well was just how price was likely going to see a quiet continuation to the upside, a slow up move, basically what usually happens into holiday situations or summertime trading, and we got both of those coming up at the same time here with the Memorial Day holiday here in the United States. So that's going to be something to keep an eye on as the market continues through tomorrow. You're likely going to see the volatility, the volume dry up even more so. But overall, pushing to this new high with all the events we have coming up, it'd be hard to pressed to say that this thing just continues onward. The most likely case here is a rotation back down and perhaps just a hold in this zone rather than continue higher or sell off. One thing that you've noticed here is every new high has not just taken off to a new high. As a matter of fact, ever since we put in that new high here, that high was sold. Price pulled back to a lower high, sold. Only when you came into this high, again, sold. When price hit a new high here, sold. We hit a new high here, sold. And right now we're at it again. So to some degree, the previous history here suggests that we would likely rotate back after reaching a new high here. So just keep that in mind. Maintaining acceptance above 2400 overall suggests a continuation, and we do have those upside targets at 24.24 and 24.59. The major upside target is going to be 59.75 to 64 half on a swing basis here should we find acceptance above 2400. So I wanted to provide a little bit of detail there as we head into the rest of the weekend. Looking at the intraday time frame right now. All right, here's the ES in the intraday time frame. Basically, price has pushed higher after the previous close, hit that high at 24.12 half and has rotated downward and is now in balance up here, trading above that 24.04 LVN. So right now it could be short-term fade the edges. Should price come down into this edge, look to fade it back up. If price comes into this edge, look to fade it back down. Until price fails to hold 24.04, we will likely see further range-based activity above that level. Below 24.04 may rotate this thing back to our 5-day VPOC at 23.98, but keep in mind the overall trend has been up, and that favors further quiet upside price discovery. So as long as 24.04 remains intact, further uptrending behavior likely to be seen with expansion above 24.12s. All right, let's take a look at crude oil. All right, crude oil seeing some significant activity here in overnight trading, and that is likely due to the OPEC meeting. OPEC here likely playing a big role in this today, and you can see that after we came out of this narrow range, we have since seen a pattern of lower highs and lower lows in this channel. We're now at the top end of the range, and today's overnight action here with OPEC basically has given us a pretty clear impulse move down first, and it's given us some clear boundaries here to watch. I've mentioned before that this thing remains bullish as long as 49.80 remains intact, and so I mentioned yesterday any pullback into 49.80 to 50 is likely to be defended for a shot at new highs into 53.40 to 53.75. So that idea still remains intact. We came just shy of 50 evens here today, getting a low of 50.08. But so far, as long as that 50.80 or 50 rather to 49.80 zone remains intact, overall bulls looking to defend that area. Any failure to hold that zone would rotate this thing back down, at least back to the FOMC key level from May 3rd, which would be 47.65. So that's going to be something to watch. That's going to be the pivot zone to watch. If we look at the intraday time frame here, again, something to keep in mind is we've had an impulse sell-off. So a very nice move in overnight trading here where we had a high of 52 even, and then price sold off sharply, reaching a low here at about 50.17. From there, you have a midpoint bounce, and that gives you a key range to watch. So that's going to be the one to mark here as you play the rest of the day, and that's going to provide the major swing moves outside that key range. You can see already early on price attempted to hold below the bottom and failed, and that's led to a rotation back up. So again, right now that's going to outline which are the key levels to watch for movement inside the range. Given the early rejection here, we could see a move back up toward 51.40. If this thing fails to get above the midpoint, again, we could be looking at expansion through the bottom that leads to more selling pressure. So continue to watch this impulse range for directional cues the rest of the session. But given the current pace and tempo, that could mean a little bit more volatility throughout the day. All right, let's see what GC looks like here in a higher time frame. In a higher time frame chart, lower time frame is not doing a whole lot. Higher time frame, I just wanted to reiterate here that we're still holding at highs after the recent bounce. This bounce here took us into 1263 as a familiar key range or key level for us. This is the previous month's low price back above that area with a squeeze day here, and now bulls defending here off the lower edge. I mentioned that bulls defending 1145s are looking to see further upside movement into 1180, perhaps as high as recent highs between 1295 and 1300. Now, if there's any rejection of prices here into above 1265, that could be an early indication that we're going to see a stop run of 1245 and perhaps see a move downward. So again, this is the key range to watch. Both edges, you got to watch for failed range expansion. Again, if this thing were to come down here and see a trap, it could be a nice springboard effect to the upside. So right now the flow is still to the upside. We're in a holding pattern right now, and at some point here we'll likely see some follow through outside of this range, so keep that in mind. Lastly, let's take a look at the NQ. The NQ in the higher time frame, again, very similar to the ES. We got that nice impulse move the previous week. Price shot up through the midpoint of the range and held. That's an indication you're coming back toward the top end of the range and likely through it. I've talked about the expanding nature of this range, and so we could see a rotation. If there's any failure to hold 57.27, we could hold this above it throughout the day, for example, and then Friday we could see a move down. Breaking back below that level would suggest a move and a retest back toward lows as this thing continues to build out. So again, this impulse move right here could set the edge for the range, and now we could be looking at fading the edges inside this range as we see further digestion of these prices, but this overall has an upward bias. So fading up here, you have to be very, very careful about how you fade, how you enter, how you manage your risk at this zone, because we are counter trend right now. If this were to come downward, buying pullback still the best idea and offers the best results here given the current squeeze of the market right now. Selling up here, it could be a 1 or 2 day pullback or hold, or it could be a 1 day wonder, but overall the bias still remains to the upside. So while we could see failed range expansion here, that's not usually the opportunity to play. Instead, look to fade the edges at the opposite end. All right, let's take a look lastly at the intraday time frame for the NQ. All right, here's a look at the intraday time frame for the NQ. Looks very similar to the ES. We have clear edges, an impulse move up, and since then we've seen some trading range activity as price looks to build and establish balance up here around value. So that could offer an opportunity if price pushes downward to look to fade it back up. Price comes up here, look to fade it back down. That's likely the path here with an upward bias until we fail to hold the previous session's close. Failing to hold here, say 57.34s, would suggest a rotation much lower. But again, we're in a market right now that every pullback is likely to be defended as this thing quietly drifts higher to new highs. So that's the likely path here. We'll keep an eye on 57.34s as the major pivot here, but for bias. But overall, look to fade the edges with an upward bias at the moment. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.